Hello people, welcome to WealthHead. This is the third video in this tax series. If you are interested in knowing about tax brackets and deadlines for taxes due in April 2023, then please watch the first two videos. Well, today we are going to talk about tax credits. If you are not aware of them, the government typically creates these tax credits to promote or reward particular behaviors that are deemed advantageous to the economy, the environment, or to advance any other goal it deems vital. There are many tax credits available, and it is highly beneficial to claim all the benefits you're entitled to. But before we go into credits, let's see the difference between tax credits and tax deductions. Credits and deductions are similar in the sense that they reduce the income tax owed by a filer, but they are very different in the way they do it and generally how much they could save you. A tax deduction is an expense you can subtract from your taxable income, thus reducing the amount of income on which you will be taxed. And a tax credit is a dollar for dollar reduction in the amount of income tax you owe. So for example, if you owe $1,000 in taxes and have a $1,000 tax credit, your tax bill would be reduced to $0. On the other hand, a tax deduction of $1,000 would reduce your taxable income by $1,000, which would in turn reduce your tax bill, but not as much as a tax credit. In order to try to understand it better, let's take two cases. Case 1 with a $10,000 tax deduction and case 2 with a $10,000 tax credit. Let's assume that your annual gross income is $100,000 and you get a tax deduction of $10,000 on it. Before I continue, please note that these are just random numbers to explain the idea and does not represent the current standard deductions or tax rates. So your taxable income here would become $90,000 after applying the $10,000 tax deduction. Now let's assume for the sake of easy calculations that your tax rate is 20%. This would mean that your total tax would be $18,000. Now in case 2, you again have a $100,000 gross income and no tax deduction. Now let's assume this means that you have a $100,000 taxable income. Now at the tax rate of 20%, you will end up with a tax of $20,000. The $10,000 tax credit will now be applied to this calculated tax, and your final tax owed would reduce to $10,000. So tax credits can have a much bigger impact on your taxes and help you lower the total tax owed or increase the refund from IRS by a larger margin as compared to deductions. So this makes it very important to not only be aware of the different tax credit options available out there, but also be able to figure out which ones you qualify for. So there are many tax credits available for low and middle income households. But before we look into some of these, it is important to know the difference between refundable, non-refundable, and partially refundable credits. Refundable tax credits are the most beneficial because they are completely paid out if you qualify for them. What this means is that a taxpayer is entitled to the entire amount of the credit. So it reduces the tax you owe to the IRS, and in case you are owed a refund, it adds to the refund owed to you. On the other hand, this is not the case with the non-refundable credits, which, if you qualify for them, reduce the amount you might owe in taxes, but in case you're expecting a refund, then this credit cannot be applied to it. So let's say that you owe $1,000 in taxes, and you qualify for one of the non-refundable tax credits of $2,000. Then after applying the credit, your tax owed would reduce to $0, but the remaining $1,000 would not be applied as a refund to you. Finally, there are partially refundable credits, which as the name suggests are partially refundable. In this case, you will get more tax reduction on the taxes due and less on the refunds. If it's confusing, then wait for when I talk about the American Opportunity Tax Credit later in the video. It will become clear there. One of the most beneficial tax credits for low and moderate income households is the Earned Income Tax Credit, or EITC. This was established in 1975, and the eligibility for this is determined by income among other things. For the 2022 tax year, the taxes for which are due in April 2023, the earned income credit ranges from $560 to $6,935 depending upon your tax filing status, your income, and number of children. So for this last financial year, the eligibility criteria is that you must be at least 19 years old unless you're a part-time or a full-time student, in which case you must be at least 24 years old. Also, for a former foster youth or qualified homeless youth, the minimum age is 18 years old. There is no upper age limit for tax year 2022. If you're married, then both you and your spouse must have valid social security numbers and must have lived in the country for more than 6 months. You must have at least $1 of earned income, and this does not include pensions and unemployment. The income requirements to be able to avail this benefit when filing your taxes in 2023 are shown on the screen here. So if you're married filing jointly and have 3 children, then you can avail a maximum earned income tax credit of $6,935 if your gross income is $59,187 or less. So I'm not going to read out all the numbers here. Please take a screenshot of this to check if you're eligible or not. You do not qualify for this credit if you have earned $10,300 or more in 2022 from investment income, or if you may be claimed as a dependent on another filer's tax return. Also, this is a refundable tax credit, so this could be added to your tax refund in case you're eligible for this. So these were some of the main requirements to be eligible for this credit. There might be certain other criteria to look into, such as the one related to foreign earned income or foreign earned income exclusion. I recommend that all the filers must check their eligibility for receiving this credit each year, as this changes every year. The next tax credit one must look for is the Child and Dependent Care Income Tax Credit. This covers a part of babysitting, daycare, or similar childcare costs for dependents under the age of 13 that you spent so that you could work or actively look for work. This credit is also available for the cost of taking care of a spouse or a dependent of any age who is physically or mentally incapable of self-care. It's very important to know that in general, you may not take this credit if your filing status is married filing separately. Your filing status must be single, married filing jointly, head of household, or qualifying widow or widower with a qualifying child. For tax year 2022, this credit ranges from 20 to 35% of $3,000 of qualifying expenses for one dependent or $6,000 for 2 or more dependents. The actual percent credit you might get depends on your income, and just like earned income tax credit, this is also refundable. American Opportunity Tax Credit or AOTC is another tax credit that you might be eligible for if you were a student or a parent of a student in the tax year 2022. This credit helps to reduce the cost of attending college. Generally, this is the best and the most valuable education-related tax credit if you qualify for it. So do check your eligibility for this one, as there are several eligibility requirements. So who can claim this credit? A student if not claimed as a dependent on anyone else's tax return, parents who paid for the tuition of a student who is a dependent, and spouses if they use the married filing jointly status can claim this credit. To be able to eligible for this one, the student must have not completed the first 4 years of post-secondary education, which means that this is specifically for undergraduate college students. During the tax year, the student must have at least a half-time status and must be enrolled in at least one academic semester leading to a degree or a similar credential. Also, the student must not have claimed the AOTC for more than 4 tax years. If the student has ever been a state or a federal criminal because of a drug conviction, then they are not eligible for this tax credit. Your eligibility for this tax credit also depends on your modified adjusted gross income. If your modified adjusted gross income was $80,000 or less in 2022 for single filers, and $160,000 or less if you file your taxes jointly with a spouse, then you are eligible for the complete credit. If your modified gross income was between $80,000 and $90,000 for single filers and between $160,000 and $180,000 for joint filers, then you will receive a reduced credit. And if you earned more than $90,000 for single and $180,000 for joint filers, then you can't claim this credit. Now, the next question that arises is, how much credit can one get? For the first $2,000 of qualified expenses, you get a complete 100% credit. Then you get 25% of the expenses above $2,000, and the maximum annual credit per student is $2,500. Along with the tuition fee, the qualifying expenses also include the cost of books, equipment, and supplies related to the program of study. But it does not include costs related to medical insurance, transportation, housing, and some other costs. One important thing to know here is that AOTC is partially refundable. This means that if you qualify, you can get the complete $2,500 credit on the taxes you owe. So in case you owe $3,000 tax and you're eligible for the complete $2,500 AOTC, then you'll end up paying only $500 to IRS. But when it comes to tax refunds, you can receive only 40% of the AOTC value you qualify for. So let's say you qualify for a refund of $500 and you qualified for the complete $2,500 AOTC. then you could actually add just an additional $1,000, which is 40% of $2,500 to your tax refund and get a total of $1,500. At present, this is the best educational tax credit for students and their parents out there. Now, if you're not eligible for American Opportunity Tax Credit, then look into the Lifetime Learning Credit, which applies to undergraduates, graduates, and other non-degree or vocational students. And there's no limit on the number of years you can claim it. So, this one is ideal for graduate students or anyone taking classes to develop new skills, even if you already claimed the American Opportunity Tax Credit on your taxes in the past. But you can't claim both AOTC and the Lifetime Learning Credit in the same year. The maximum credit you can claim is 20% of up to $10,000 you paid towards 2022 tuition, fees or other qualified expenses for a maximum of $2,000. Just like American Opportunity Tax Credit, there are certain costs such as living expenses and transportation that cannot be included to get this credit. To be eligible for this, your modified annual gross income criteria is the same as that for AOTC, so please go back to that section of the video to be able to see that. One thing to take care of is that this credit is not refundable. So you cannot receive the Lifetime Learning Credit as a refund if you earned no income or owe no tax. This can only be used to reduce the amount of tax owed to IRS. The government wants you to save money for retirement, and they offer a tax credit for people who do so. The Retirement Savings Contribution Credit, also known as the Savers Credit, is a tax credit of up to $1,000 for single filers and $2,000 if married filing jointly for low and middle income taxpayers who contribute to a retirement account. Your adjusted gross income must be below $34,000 for single filers, $51,000 for head of households, and $68,000 for those married and filing jointly. Other eligibility requirements are that you must of course have paid a retirement plan or IRA account contribution, must be 18 years or older, not a full-time student, and not claimed as a dependent on another person's tax return. On your screen right now are the rates for the Savers Tax Credit for the tax year 2022. So please take a screenshot here if you think you might be eligible for this credit. Now, just like the Lifetime Learning Credit, Savers Credit is also non-refundable. So this can be used to reduce the taxes you owe, but it can't get you a tax refund. So these were some of the main tax credits that might help you in saving taxes due or increasing the tax refund if you qualify for them. There are many other tax credits available out there, such as the Residential Energy Credit, Electric Vehicle Tax Credit, Adoption Credit, Child Credit, among others. So it would be a good idea to check out some of those and check if you qualify for them. I hope this video was helpful. Let me know what other topic you'd like me to make a video on. Thanks and peace out.